Hello, welcome back to Learn Oikonomia. In this video, we are going to look into the banking sector reforms. We know that the Indian economy has witnessed reforms in various sectors. So the reforms involves changes, right? These changes are needed to revive the economy, to help the economy to face with the existing challenges, and also this would be helping the economy to improve its performance in various sectors. So let's understand what all are were the banking sector reforms which happened in the Indian economy. We know that the government it has recently announced the new banking sector reforms which will be involving the establishment of development finance institution, which is shortly known as DFI. This is mainly meant for infrastructure based development, and also the government in order to look into the bad loans and all, it has gone for various reforms. Creation of a bad bank to deal with the problem of non-performing asset was another initiative taken by the government of India. Privatization of public sector banks was also a step taken by the government of India to deal with the burden of mobilizing additional capital. I mean, burden in terms of mobilizing additional capital means Indian economy is facing a lot of problems with respect to finance. So, to mobilize capital, it was very much important for the Indian economy to deal with the problem of non-performing assets, and also we could see that various public sector banks were facing many challenges, and to revive these banks it was very much important to go for privatization in the banking sector as well. So that was what Indian government has gone for, privatization of many of the public sector banks. We could see that these reforms, these have not ended. These reforms are taking place again and again. Some of these reforms are happening in the banking sector again, and some of the new reforms are also happening. All the basis of all these reforms are to revive the Indian economy. So Indian banking sector, we know that it has been evolving. Many changes are happening in the banking sector, especially with the help with the advancement in technology and all. We could see that there are mobile banking, there are ATM banking, so all these kinds of online transactions. So all these kinds of things are happening. So as a result of advancement in technology, so as a result, the journey of banking, it is still going on. As a result, what we need is that many more changes are required. So these reforms would be helping us to equip our banking sector to deal with the existing financial crisis and situation. If you look into the banking sector in the past, we could see that during the pre-independence period, that means that till 1947, there was Swadeshi movement, and this Swadeshi movement has seen the birth of many local as well as small-scale banks. And the main peculiar feature of these banks were that these many of these banks failed mainly due to the internal frauds, and also they were interconnected lending, and so all these have led to the failure of these kinds of bank in the second generation, which started from 1947 to and lasted till 67. We could see that there were concentration of resources in a few hands. I mean, a few business people or families or groups, they were the ones who held all the resources, and there were unequal distribution of resources. So it has neglected creditor flow to agriculture. Agriculture sector means it is the main backbone of the Indian economy, and when we neglected agriculture sector, that means that we neglected a major portion of India's populations, or we have only concentrated upon a few business class or families. So this was another problem which Indian economy has faced. During third generation, which started from 1967 and ended in 91, we could see that the government, it was successful to an extent because it could break the nexus between industry and banks through nationalization. What the government has done is that the government has nationalized 20 private sector banks, and this happened in two phases. In 1967, there was one nationalization, and in 1980 and there was another one. And priority sector lending was initiated in 1972. All these have led to the uh, a major shift in the banking sector from class banking to mass banking. That means that till then the upper class were the ones who got all the facilities with respect to banking, and now in the case of mass banking, the benefits of banking have reached all the population, and this has created a positive impact on expansion of the network across India. That means that earlier the banks were concentrated in urban areas. Now it could had its impact in rural areas as well. It had started many branches in rural India as well. As a result, there is a massive mobilization of public deposit and incremental credit flow even to agriculture sectors and allied sectors. But we could see that the banking industry it could experience a major decline with respect to asset quality, financial soundness, efficiency, etc., etc., etc. Mainly during the period of as a relaxation of credit appraisal standards to meet the priority sector targets. We know that in 1991, the Indian economy has witnessed a major reform, which the shortly known as LPG reform, liberalization, privatization, and globalization. And as a result of this liberalization, there was a quite diversified Indian impact in the Indian economy after 1991. In the fourth generation, that means that starting from 1991 to 2014, the Indian banking sector saw a major landmark with respect to its reforms. There was issue of fresh licenses to private banks, and also the private banks were to infuse competition, and this is all to enhance the productivity as well as efficiency by leveraging technology. Prudential norms were introduced, operational flexibility were introduced, implementation of best corporate governance practices was there, then strengthening of capital base for base as per the Basel norms was also there. Now, we could see that since 2014, the banking sector could witness the adoption of a new program, which is shortly known as JAM. The full form is Jantan, Aadhaar, and Mobile. So, this trinity is very much important with respect to the Indian banking sector. If when we are referring to reforms, and also we have issued licenses to payment banks and also small finance banks. All these were to achieve the last milestone connectivity in the financial inclusion drive. We know that our government is always trying to attain financial inclusion. That is a main reason why we are providing scholarships, unemployment allowances, pension, everything through the bank account. This is because the Indian government is trying its very step to to reach in order to make reach the benefits of banking sector even to the poorest of the poor. Given the current challenges of the population growth and related aspects, we could see that there were many other challenges which the Indian economy has faced, especially very recently the COVID-19 pandemic has affected Indian economy. Not only India was affected, all the entire world has been affected as a result of these kinds of problems. So we could see that when all these problems affected Indian economy, this has impacted its banking sector as well. In 1991, what happened is that the Narasimham Committee on banking structure in India, they have given certain recommendations. They have emphasized that the Indian government or the Indian economy should have three or four large commercial banks with some domestic as well as international presence, along with foreign banks. Then they said that, or they recommended for some mid-sized lenders, including some small banks which would have some economy-wide presence. As a result of these kinds of recommendation, or by following these kind of recommendations, the government of India has merged certain public sector banks. It has initiated some few steps to set up DFI, bad bank, etc. We know that universal banking model is something which is preferred by all the economies, but in the case of India, there have been still some sections of population which are not even getting the benefits of financial inclusion programs. What we need is that certain specialized banks are very much important in order to help certain agriculture sector, certain allied activities, infrastructure lending, wholesale banking, investment banking. Also, we could see that several tribal people, several tribal groups are actually neglected. Still, they are neglected with respect to banking. So we have to incorporate them too in order to attain the financial inclusion to its fullest possible success. Risk management could be considered as something which is very much specific to the banking sector. When I say this is very much specific to banking sector, I don't mean that the risk management is not applicable to other sectors. But when we refer to banking sector, we can see that risk management is something which is unavoidable. And we have already discussed about specialized banks, and this specialized bank will not indulge in cross selling of insurance and mutual funds, and they can have some need based infrastructure, and they can be staffed with professionals with specialized skills from the market. So when we are going for specialized bank, that will be opening up a lot of job opportunities in the labor market, so that we can reduce unemployment scenario as well. Regulatory surveillance through prudential supervision and control over the banks could be considered easier as a result of these kinds of steps taken by the government. And also, the proposed DFI, this could be established as a specialized bank with some low cost public deposit. And we could see that some existing strong local area banks as well as urban or cooperative banks could be converted into RAM banks, and this could be encouraged to get listed on a recognized stock exchange and adhere to ESG. That means that environment, social responsibility, and governance. Till now, we could see that the universal banking is a failure in India, because as I have already told you, there have been some sections or some groups of people who have not even included, who are not even covered in the financial inclusion programs of the government. That means that they are not deliberately rejected, but accidentally they are not into these kind of program. They are not even using, they do not even have a proper bank account with them. In the case of fifth generation banking, the reforms and all changes or everything should focus on the need for a higher individual deposit insurance, and also we should foster the government to tighten the loose ends by allowing them to build diversified loan portfolios and have some cross holdings to mitigate the concentration. And also, we need establishment of sector-wise regulators to deal with the current scenario. So that's all for today. Please like, share, and subscribe to this channel for more videos. And you can be a part of my Telegram group and Telegram channel to discuss your doubts. I will be providing the links of both my Telegram group and Telegram channel in the description box. That's all for today. Thank you.